now tuned in to the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. Today we got a returning guest, Justin Huhn from the Uranium Insider. We've talked about uranium quite a bit, and Justin Huhn had blessed us with his time previously to talk about the uranium market. We have seen some huge gains in the market since then, and so we're going to get an update on just what's going on. We knew that Sprott was coming into the space. We knew that Sprott was going to be buying physical uranium and actually squeezing the market, and so that was kind of what we had predicted what was going to happen, and that's what we're seeing. But there's still some other things going on across the globe. There's energy shortages and everything, so we're going to get into some of these topics and just see what's going on in the uranium market. And so today we welcome Justin. How you doing today?
I'm doing great. Yeah, good to be back. How are you?
Oh man, doing well. Just trying to stay on top of the game, man. Just trying to stay on top of it. Life gets busy, and then you're like, okay, I got to make sure that I'm watching my investments. I'm watching my, all this other stuff you got going on.
Yeah, I hear you.
Yeah. So how do you balance all that out? How do you balance, work, life, family, investments?
That's a really good question. I don't know that I necessarily do it all that well. I'm still kind of learning and trying to figure it out. I for the most part on the weekends, I try to shut off as much as I can. Like Saturdays, I basically just do not look at email at all. An email load is my biggest challenge. So Saturdays, I completely cut off. Sundays, the second half of the day, I'm already doing the updated, weekly watch list for our newsletter members, where I go through all the charts of our stocks that we hold and recommend, and do an update video. And I do that every Sunday. So Sunday afternoon, I'm already preparing for Monday. But most of my work during the week, I try to keep it morning to early afternoon, and about time where the market, just around where the market closes. Maybe I have a couple of meetings or interviews, and then I try to keep the late afternoon, evenings to family time and working outside in the yard, working in the garden, trying to keep everything in order in my house. So that's I guess that's how I try to balance it. And somewhere in there, I squeeze in an occasional motorcycle ride and some exercise.
Nice. Are you a runner, or are you a weightlifter? What you do for exercise?
I like to mountain bike. That's kind of what I do, for cardio. And then I just do basic kind of calisthenics, kettlebell type, body weight exercises.
Nice. I used to do this boot camp class at the gym. I love body weight, but I haven't done it since COVID hit. So it's been, I'm just back to just regular lifting and stuff. But it's body weight stuff kind of is more interesting.
Yeah, for sure.
Definitely. So what's been happening in the uranium market overall? So I mean, that's a broad question. I mean, we have Sprott coming in. We have, quite a few of these companies are just going up, just a lot of X's right now. So I know that I experienced some of those gains, and a lot of people were excited because you actually, and you're actually one of the people that have had a strong conviction about this the whole time. What are some of those basic principles that you apply to have just a strong conviction? Because I'm sure you've been through so many storms and everything. Some of us are just new coming in and like only been in like the last year, but you've been weathered a lot of storms in this. So what's kind of like was your foundation for that in investing?
That's a really good question. I think that the more time that I spent researching the fundamental case for this investment, the more confidence I had in it. During the early days, let's say 2017, 2018, it really just kind of took a lot of faith that I believed in the nuclear market, that I believed in the case for the price of uranium to rise, and that I believed that eventually the financials and the money flow would come into the sector. And so that last belief really was kind of the hardest one, because there's definitely been fundamental cases that have been strong where the money just didn't come into the sector. I remember the early part of last year, that was like the oil tankers trade. That was one that was like super obvious fundamentally. And I was interested in that because uranium was still at the time just kind of chopping sideways, as it did for multiple years after it bottomed in late 2016. But the money never came into that trade, and that was a real head scratcher for tanker bulls, because they were really, really confident in the trade, and the rates, the tanker rates were going up really quickly, and everything made sense on paper, but the money just didn't come. And eventually that trade reversed. We made a couple of short-term trades on that one, so we did okay. But as far as uranium goes, it's just one of those things where the fundamental case for it has just continued to improve. I mean, all biases aside, we just keep hearing more positive news. I mean, almost day over day, but at the very least week over week. And that hasn't really reversed. We haven't really seen any substantial bearish news come to this sector since I've been watching it. And that part of the reason why is because it was so unloved at the time that I first came to it, it was 2016. And since then it was, that was the bottom of the commodity. Everybody hated it. So many people lost a lot of money just hanging on for years. I mean, I know people that have been holding their stocks for 10 years, which is really brutal in a bear market, especially with the dilution. All these companies have to raise money and stay alive while the commodity continues to slide downward year over year over year. So it was a super contrarian bet when I first came to it. And so really you only had up to go. Like that was the only way you could go from that point. But also just a recognition that that this market moves extremely slowly, and understanding that, pretty early on, and not expecting things to turn quickly really helped me to hold on through a lot of volatile times and continue to add to my positions as they were flat or down or barely up or whatever it might be over the years. And I've honestly been continuing to add, even though my first positions I took in 2017, I've traded in and out of a lot of different companies since then. But I'm still, I was buying last week. So I'm still adding to these positions that I'm up multiples on at this point, because I think that we have so much farther to go. So it's it's one of these trades where you really have to have conviction in order to hang on, because the volatility is just so great. And so the more I read, the more I understand and feel like I have a grasp of what's going on, then it becomes easy, at least for me, to sit on these cyclical downturns. So we have, in a general bull market, we have kind of these 2 steps forward, 1 step back, 2 steps forward, 1 step back. We do that a few times, and then there will be a 30-40% correction, and then we'll do it again. Right. And we're kind of like in the second leg of that right now. So we had December through June was this higher highs, higher lows. June to August was about a 30-35% correction. And now we're starting to stair step back up again. So and you just can't get 2, 3, 4, 5+X returns on stocks that aren't volatile to the downside as well. So you kind of have to go in understanding that will happen throughout the course of this bull market, and there's going to be painful pullbacks. So I don't know, that was kind of a meandering answer, but short answer is educate yourself as much as possible on a fundamental investment, and that helps to understand what's going on in the markets, and know that when a stock is sliding or the whole sector is sliding, knowing why it's sliding is really helpful to either hanging on or actually being concerned.
Yeah. Nice. So I assume like you like to go to theme parks or something, like, cause I don't know how you stomach those high volatility, but man, like I think the one in, what was it? June to August. Yeah, that was the one I wanted to contact you. Like, what is going on? So like that volatility was just like, I don't know how much percentage of a drop it was, but I saw it. I did have some conviction, and I bought some more, and then shortly after we did see a huge rise, and so yeah, it's definitely one of those trades where you have to be able to stomach the volatility. So people have to assess how much risk they're willing to take, and all of that. And obviously, if you educate yourself, good enough, well enough to where you understand that this is something that this is a bull market that we're in right now, then you'll have more conviction and not really worry about the downturns as much.
For sure. Yeah. Yeah. That was that correction was difficult for a lot of people. I mean, it wasn't easy for us either, because it's, obviously we're beholden to our newsletter members to some extent. But the bottom of that correction was July 19th, I believe. And then the second bottom, which was a higher low, was August 19th, like 30 days perfectly. But about a week before the bottom in July, we had sent out a bulletin to our newsletter members called Uranium Gut Check. And basically we just described what we were seeing in the markets, which was low volume selling. The spot price was moving down a little bit, but the volumes were low. The equities were moving down, but the volumes were low. And so to us, that was when we see big volume coming in, pushing things up, and declining volume when it's coming down. That basically, I mean, to put it really simply, that's quote unquote smart money or institutional money that's coming in, moving things up, and retail selling it down. And a lot of times what happens is once you get to that cyclical top, you'll see 1 or 2 days of big volume selling. And in my opinion, that's also this institutional money just kind of like setting the trap or seeding the sell-off by starting it. So that they'll buy down here on really high volume, established positions, institutions and retail together will take it up. And at the peak of that cyclical move, institutions will hit it with another 1 or 2 days of big volume selling, freak retail out, and then they'll just sit back and watch retail do their thing for the next month or two, or even sometimes a few weeks. Then finally, when sentiment is despondent, they'll come back in and rinse and repeat. So we essentially said that a week before the bottom in July, and luckily for us and for a lot of our members, they heeded that advice and added to positions at that bottom. And stocks since the July bottom have more than doubled, most of them anyways. So it can be a difficult thing, but understanding the reasons why, like understanding market psychology and these intra-cycle mini cycles. So we have this long-term bull market that will generally trend up, and understanding what's causing the fluctuations during that is really, really helps. And that's obviously something we like to communicate.
Yeah. So did y'all have like a Michael Burry experience? I mean, like The Big Short. I mean, like he's like holding on to this contrarian trade, and just and a lot of people were upset, but I don't know if it was to that degree, but I'm sure you had a few people in there that kind of
Yeah, there most folks. There were a few that came to the uranium sector, and some that came to our newsletter, like in May or in June, and we're up really big. And then by the time we hit the bottoms in July, they were down, 10-20% if they had just entered that trade. And they were kind of freaking out. And it was also difficult because everybody knew that Sprott was coming. We didn't know to what extent their purchasing would have on the markets and what kind of volumes it would be talking about. Nobody knew that. I don't even think Sprott knew that, but we knew that they were coming. And so to see, the summer doldrums and the stock selling off and sentiment so low, just weeks away from, Sprott's ATM going live was very difficult for a lot of investors. And investors is kind of a strong word. If you're coming in a couple of months believing in something and then freaking out, it's more like a speculation. But we definitely had there's someone that I think about every day almost, who communicated with us that it was that slide down in June through mid-August was the most difficult thing they'd ever experienced in their entire life. And they ended up selling kind of near the lows and lost a lot of money. And they didn't really listen to our recommendations or our take on the market, which is okay. Everybody's got to do what's best for themselves. But I think about that guy every single day, because he would be up more than he lost currently right now if he had just held on. And it's hard. I mean, I get it. It's a psychological battle, and it's simple, but it's not easy.
Yeah, definitely. And I compare it, uranium to like almost like the crypto space, not in terms of like um, the same type of asset, but just being the people's, kind of investment where, you have like average people that are able to make a massive amount of money in this trade, and because uranium was so beaten down, even for me, like, and my in-laws, like, I was able to, buy some stuff in their IRAs and stuff like that. And just like you got average people being able to come in and make a massive amount of money. I mean, similar to like, Bitcoin, people that, were coming in and stuff, super early on and stuff. So I think, it's a great trade, and it's a great play for a lot of people that are, the average retail investor that may not have a lot of capital or, or whatnot.
It's true. Yeah, there's no bull market like a uranium bull market, with maybe the exception of crypto, and some other resources can move similarly. But the thing with the uranium market that's different from crypto or other resources is that there's just such a small number of investments that are even able to trade within the public space. There's 65 companies, whereas there's thousands of coins, there's thousands of gold and silver companies. There's multiple hundreds, if not thousands, of oil companies. So the resource investor is kind of a unique volatility-seeking person, but the uranium market is so unique because of its small size that when real money flows into it, the moves are huge. And we see that. And oftentimes, just like December of last year, when the money comes in, it's not always at a moment that makes sense to most retail investors. And so that's one reason why we don't really like to trade in and out of our positions. I mean, we'll change our positions based on company news and company developments. And obviously we do some options trades as well that expire, so we can, cycle that cash into new positions. But for the most part, we don't like to try to time these things, with an exception of trimming gains and ultimately selling. But swing trading is what I'm talking about. We don't like to do that because it's the points where the stocks move, especially to the upside, can be so surprising and so fast that to try to time the bottom, if you miss it by a day, you might have missed a 20% move. So we really like to add in tranches. That's always what we recommend to people that are just arriving to this investment, is, especially based on where the market is moving. Technically, looking at the charts, if things are a little bit overstretched, we definitely don't recommend going in with full positions, but buying one tranche and then another one a week later, another one maybe 2 weeks later, hanging on to a bit of cash in case we see a bigger correction or a cyclical downturn like we saw in July, August. Then you can go in heavier when things are really bloody, I guess.
Yeah, definitely. When there's blood in the streets, that's when you buy. So what's currently happening with Sprott, and some of these other companies that are in the uranium space? Are you seeing anything new, any new things that are happening, or are we just seeing, the effects of Sprott buying so much uranium?
Yeah, so I know it's been a number of months since we spoke, but so Sprott's ATM went live on the 17th of August, and they just came out swinging. They purchased 10 million pounds in 4 weeks. They're now up to over 16 million pounds, at a little over, we're about 9 weeks in. So originally what happened is it seemed like the money was coming in so quickly to the Sprott Physical Uranium Trust stock. So that's U.UN on the TSX, or U.U on the TSX, and SRUUF on the OTC. And Sprott's willing to issue shares into the open market via the ATM up to 50 or 60% of the daily trading volume. And of course, they can adjust that as needed. But generally speaking, if they're trading at more than a 1% premium to their net asset value, they're issuing shares into the market and raising cash. So that those first 4 weeks, it seemed like they were trying to blow through whatever cash they had on hand on almost a daily basis, purchasing whatever was available for 30 days settlement. So that's uranium that's sitting in a can at one of the conversion facilities that can just change hands on paper. It's not being delivered. They'll hold it at any of the conversion facilities. Sprott will. And what that did was it moved the spot price up like almost 60% in 4 weeks, from $32 to $52, which is an astonishing move. Since right around at that peak, the money started coming. There was selling pressure on the Sprott vehicle, and the spot price was sliding down. It seemed to us to be a motivated seller for whatever reason. It's highly likely that it was a seller who just needed the uranium off their books at any cost for some other, who knows what happens if they blow up some other part of their book and they just need to dump something to free up liquidity. That's probably what happened with that. And that's kind of what we were hearing. As soon as that selling was over, things kind of reversed pretty quickly. Now it seems like Sprott is kind of taking this slower, steady strategy. And I think it's a smarter strategy because they don't want to, how can I say this? They don't want to cause too large of a disruption too quickly, because they are in the process of going after that New York Stock Exchange listing. And that's going to be a process. There's never been a physical uranium trust or fund listed on the NYSE before. So it's a new concept for the NYSE. And they have to have a 4-week public comment period for the SEC to go through their approval process. And they know they're going to get some pushback, especially from the industry and the utilities. And so at this point, I think it's not that they're playing it safe. They've been buying a lot of uranium still. They just haven't coming in slamming the market. They are buying 100,000 pounds, 200,000, 300,000, 400,000 on a day over day basis. They're still pushing, last week they purchased almost 2 million pounds in that week alone. But every day they're coming back into the market with, 30, 50, 60 million in cash on hand. So they're not like blowing through their cash, trying to force 30-day settlement. They're probably pushing out on the delivery curve or the settlement curve a bit, maybe going to 60 days with this slow accumulation. I think it's really intelligent. I still think we're going to see good moves in the spot price this year. I do think we'll breach that $52. We could even see 55 to 60 by the end of the year. But I think that they are going to take this strategy until they get closer to that New York Stock Exchange listing approval. That's likely going to be like a Q2, Q3 story. That doesn't mean that the market's not going to move in the meantime. We've seen what they've been able to do on the TSX alone. So ultimately, really, it doesn't even come down to as much as it is what Sprott wants to do, but what funds are flowing into that vehicle. Because if they've set this up in a way that now the messaging, not only verbally, but in what they've physically done to the market is, if you guys buy this thing, we're buying physical uranium. And the institutions are understanding that now. But there's huge upside with Sprott, and they've barely even scratched the surface on what they can do in terms of marketing this vehicle. So the New York Stock Exchange listing is not necessary, but it would just be gasoline on the fire. And in the meantime, this slow accumulation is, in my opinion, a more positive thing in the short term, because it doesn't freak the utilities out. But if they see that there's somebody in the market buying 1 to 2 million pounds a week in the spot market, that ends up being basically the demand of the entire United States nuclear fleet. That's 50 million pounds a year almost. And so we're already hearing that the utilities have sort of woken up and are starting to get interested in covering their future needs out beyond like 2025 to the 2030 period. So that's something that they haven't been really in the market too heavily in the past few years, because the uranium has been so cheap and so abundant for short-term delivery that they haven't really needed to secure those long-term supplies. And now we're seeing that that's starting to happen again. And the term price has just jumped up, made its biggest jump in 10 years last month. That only gets updated once a month. So we'll see how it moves again in a few days here.
Wow. Yeah. I could see why they wanted to slow down and stuff, especially when, we saw like the meme stock trades, and like, I mean, there's a lot of like squeezing going on in the market. We're seeing these massive, like huge gains and prices just skyrocketing straight up and stuff. And like, there's a lot of institutions and big players at the table that did not like that.
Sure. Yeah, I totally agree. It's hard to say really where any of these markets can go. It's such a different world now than it was 15 years ago with the previous bull market. With social media, just the speed of communication is totally new, and it's who's to say? I mean, the Wall Street Bets crowd cornered Denison Mines, a uranium stock, back in February, and they sent it up 2 or 3x in a couple of days on record crazy volume. And the stock, declined and kind of chopped around for a number of months. It's now back above that high. So that's good to see. But I mean, it's not out of the question to see that. I mean, that's not part of our thesis, of course, but I think that it is a shining example of how quickly communications can spread and trends can be developed and created, and mania can ensue. I think that's certainly a possibility for this market compared to the previous.
Yeah, for sure, for sure. So have you been keeping your finger on the pulse of like the global energy crisis? We're seeing like a huge crisis with natural gas, oil. We're seeing a lot of these commodities going up, and I'm just wondering if you've been just kind of staying updated on that and how uranium fits in that picture, especially since we're still operating on a deficit. We have Sprott buying up uranium. So what's kind of your take on that?
Yeah, we've definitely been keeping on top of that. We've written about it the past few months pretty in depth in the monthly newsletter. And it's it's really a crazy time. There's energy crises happening in multiple countries. We're seeing not record highs, but close to record highs in gasoline prices in the States. Natural gas prices are soaring. Coal prices are soaring. It's definitely turned into a situation that is causing countries that have been hesitant around nuclear or have been planning to shut down nuclear plants or have been slow with the restarts in the case of Japan to sort of to take another look and to reassess what they have decided with nuclear. We're seeing multiple countries in Europe push to have nuclear included in the EU's green taxonomy, which would basically allow for European Union support of nuclear in terms of funding and other ways. We're seeing the new prime minister in Japan say, quote, "It's crucial to restart nuclear," with their current energy minister being far more aggressive in his verbiage in terms of timing on restarts. Reaffirming their carbon goals for 2030, I believe it was, or maybe 2035, which would be, they want to be, I think it's 22 to 25% carbon free energy by that time frame, which would mean another dozen reactors restarted. And I think we'll see that, and I think we'll see that at a faster pace. Currently, they've only restarted 11 of 54 reactors in Japan. Some of them have been permanently decommissioned, which are all the reactors at the Fukushima Daiichi plant, and a couple of other older and smaller reactors have been shut down permanently. But they still have something like 30 reactors that are sitting idle, and there's at least a dozen of those that are currently under review for restart. So things are looking positive in terms of restarts in Japan. Now, we don't model any new demand for Japan because we assume that they're sitting on a large amount of inventory still. But that does mean that we won't be seeing as much selling, if any, from Japan into the market. As far as Germany goes, that's kind of the shining example of failure when it comes to energy. They shut down 2/3 of their reactors after Fukushima. They have 5 or 6 left that are currently operating that are planned to shut down next year. And it's not likely they reverse course, but I'm holding out a possibility that they do for those remaining reactors. But they put $500 billion into wind and solar, and they have the highest energy prices in Europe. They have the highest air pollution. They've really failed when it comes to energy. And that is now on the global stage with with the likes of Vladimir Putin coming out saying that was really unwise for them to do that, and now he controls the natural gas shipments into Germany that they are now reliant upon because of the rising coal prices, because of the very low operating efficiency of solar and wind. I mean, it's less than 20% operating efficiency for solar and wind in Germany, whereas nuclear is 90 something percent efficiency. So it's all kind of coming to a head here in terms of energy, and finally nuclear is really starting to get the recognition that it deserves as being a reliable source of base load power that also happens to be clean energy. And that's that just adds to the supply demand situation for uranium, is positive sentiment around nuclear growing. It looks to be like, I think it's highly likely that we are in the early stages of a uranium super cycle. And I think that the Sprott situation, the financialization of the sector, and the spot price movement could be sort of a price spike situation that's shorter, let's say 2 years or less or something like that. But I think longer term, we see a multi-year super cycle for the commodity, for uranium.
Yeah, wow. Yeah, I've been hearing about Germany's energy crisis because they're a huge energy importer. So they do export a lot of goods, but as far as importing, they import a lot of energy. And so Russia being able to have that type of leverage is very interesting. What do you think about, like, so what I've been seeing is that when I watch people like you, or the audience watch people like you or other people that actually study these things, what's kind of your take on, like, politicians? You know, they kind of come out and they say things like they put the cart before the horse, like, oh, we want to get clean energy, oh, wind and solar. And then it's like, do they do the research on, like, actually studying what does that take? You know, looking at California's outages and everything, like all those different things. I feel like they just put the cart before the horse and they don't actually dive into the micro of it in order to be able to say something that's actually makes sense. Because you've been watching this for a long time. I mean, we had a bull market in the early 2000s. And so I just feel like sometimes these politicians, or a lot of times these politicians, like, they just kind of just speak out the side of their neck and don't know, you know, the fundamentals behind these things.
Yeah, I would say that's mostly true for most politicians in most places. I mean, with few exceptions. I mean, there's a few senators in the United States that are outspoken in support of nuclear. And it does seem to be getting more bipartisan support in general on a national scale. But like you mentioned, California, you know, it's basically partisan politics, and it's lobbyist money. So in California, for example, we have pretty frequently rolling blackouts in the summer, and it's not super widespread. It usually seems to be focused on a few certain jurisdictions, but the fact that the grid is strained in California already, and they will simultaneously pound the table about quote unquote climate change being the cause of the fires, and climate change being, you know, an existential threat for the state of California, et cetera, but also still continue with plans to shut down the last nuclear plant in the state, which is Diablo Canyon. And Diablo Canyon provides 10% of the grid in the entire state. And it's something like 30% of the carbon-free energy in the entire state. And the results of closing that will be in a ramping up of natural gas production and an importing of natural gas and coal power from other states. And nuclear. They already import a bit of nuclear power from the Palo Verde plant in Arizona. So there's some nuclear that'll be imported as well. So shut down our nuclear plant, import nuclear from another state, import coal, import gas. And of course, they'll go more solar, but based on, and solar operates at a much higher efficiency in California because it's so sunny all the time, but there's no way to store that energy. So to the extent that you expand solar, you have to match that with base load power that can cycle up and down, which is natural gas or coal. And so if you implement X amount of solar, you have to implement X amount of natural gas. You have to have that base load that can cycle up when the sun's not shining because we're not storing the energy during the day. And most people don't understand that, even though it's really, really, really simple math. So I, I often think about something that comedian Adam Carolla used to always say, which is when it came to things like this, just dictates from bureaucrats, which is stupid or liar. And most of the time, I think it's a little bit of both because, but in this case, in the case of California's governor, Gavin Newsom closing down nuclear and pushing for these things, it's lobby money that's going directly into his pockets that are pushing these decisions. It has nothing, absolutely nothing to do with logic, to do with energy, to do with global warming. It's all BS.
Yeah. It's just a show. It's just a show. Yeah. So that's wild. So we see some of these stocks in uranium. I know you mentioned to the audience last time about URNM, uranium ETF, and that one actually went up quite a bit. I mean, we saw it go from 60 down to 50. And then last time I saw it, it was at around 90 something. And I was like, dang, why didn't I hold on to that one? But, but I'm still in the uranium stocks. I just let go of that one. But, so do you feel like right now it's still pretty cheap compared to like where we could see this market go?
Yeah, I think so. I mean, if you buy now and close your eyes for a couple of years, you're probably going to be really happy. Of course, it's going to go up and down a lot, but that's a great stock. I haven't looked in the last week or so, but as of a couple of weeks ago, it was the best performing ETF this year out of all ETFs. So it's been just a monster. I mean, their AUM, their assets under management went from a few $1 million when they IPO'd in January of last year, or it was December the year before. It's been almost 2 years, and their AUM now is 700 something million. So they've really grown a lot, and that's very cool to see. But yeah, I think the upside still here is huge. I think, just based on the price of uranium, we know we need to go up another 50% guaranteed to get to the marginal cost of production for the mines that are going to need to come online for future supplies. But I think that we're going to vastly overshoot that now based on the developments in the past few months.
Yeah, definitely. Because like for me, like I have a decent size of money into the market. However, when I see like the more higher price stocks like URNM, I can buy less of that with my money versus like if I went into like URA or Denison Mines, or I mean, I was in Cameco at like $14. And so some of these companies like, okay, I can accumulate a lot more if I put that capital in those stocks.
Sure, definitely. Yeah, there's a lot of leverage to be had with the mining stocks relative to the commodity. So buying the Sprott Physical Uranium Trust, you're essentially buying the commodity because they intend to keep that trading pretty close to the net asset value. But I actually did some research last week because somebody asked a question about what sort of leverage do junior mining stocks in uranium have to the spot price of uranium. And so I was like, let's find out. So I went back to Q4 2016 currently and looked at the price of uranium, which was up, let's see, what was it, 160%? I think it's a little bit more than doubled, right? About 1.5x, or no, excuse me, like 2.5x. And some of the stocks have gone up pretty similarly, like Cameco since the 2016 is up about 3.5x. Some of the juniors around 3, 4, 5x. Some of the juniors have gone up almost 100x since 2016. And then everywhere in between. And so there's huge leverage to be had if you get in the right companies. And that's really what we try to do, is run everything through our own process of choosing these companies and trying to give ourselves and our members, the best leverage to that spot price move, because the returns are vastly different. Mm-hmm. But yeah, you can get huge leverage. You don't need to trade options. You don't need to trade on margin. We don't recommend trading on margin to anyone because the leverage is already so great just by owning the companies.
Yeah, definitely. What's your thoughts on Centrus? That's kind of a company I looked into a little bit. I know during the 2020 lows, it hit about $5. Looking back at its history in the last uranium bull market, it was like 6,000 or something crazy like that. And I was just like, what the heck is up with this company? So do you have any thoughts on that company and what they're doing? I don't hear much news about them or anything like that.
Yeah, there isn't much news about them. Well, first of all, when you look in reverse, it depends on the company, obviously. But if you see a chart that looks crazy parabolic in terms of where it used to be, that's typically the chart adjusting for the dilution that the company has done since that point. So they have to adjust for that on the chart because the share price doesn't reflect where it was. So to say that Centrus is going to go from $25 or wherever it's at now back to 6,000, it's like that's not going to happen. So there's a couple of other companies that have similar charts, like Energy Fuels or Westwater is the worst. They're not even a uranium company anymore, but they've diluted so much since the peak of the previous market, issued so many more shares that to reflect that on the chart, you'll see this huge woo, and then it's just starting to tick up. So it's kind of deceiving to see a chart like that.
It is.
If you look at a chart in terms of market cap, that'll be more accurate rather than share price. But Centrus, they are one of the only publicly traded means of exposure to enrichment. So they basically they enrich uranium and sell it, and they're one of the makers of what's referred to as HALEU, high assay low energy, low enrichment uranium. And that's the type of enriched uranium that will be used in small modular reactors. So this is, these small modular reactors are using higher enriched uranium than what is typical for classic reactors, which is 3.5 to 5% U-235. And these SMRs are going to run almost up to 20% enriched U-235. And so Centrus is one of the makers of that. It's a bit speculative because their primary source of uranium for enrichment comes from Russia. And so of course there was a lot of speculation about whether their imports would be limited through the renegotiated enrichment agreement from Russia. And but I think that they're good. I think that supply is going to be consistent. And the valuation is kind of getting a bit illogical at this point, but valuations just don't really matter anymore. Honestly, it's all a story of funds flow, and they're holding in both of the ETFs. And they are, like I said, pretty much the only way to have public exposure to enrichment, which makes it a unique stock.
Yeah, so they pretty much diluted their stock so much, like since it was 4,000, they issued so many more shares that now it's more shares, which makes the price less than what it was. Obviously, we had the bear market in there too. I don't know what the price would look like if we didn't, if they issued those shares and we didn't have the bear market or whatnot.
Right.
But yeah.
Yeah, exactly. Well, the stock never was actually at 4,000. That's just how the chart has to reflect the dilution. So the stock at the peak of the previous market, I'm just guessing, was $100 or something around there, right? But because they issued so many more shares, the chart has to continually adjust for that. So if you look at a chart for Westwater Resources, it'll show the previous market. The stock was $800,000 or something like that, and now it's 7, but it never was that high. That's just how the chart has to adjust for so many more shares have been issued since then. And they issue shares and they get to a share count that starts to look ridiculous. And then they do a reverse split. They'll do a 10-for-1 share consolidation. And so then that will reset the price. Then they'll have fewer shares of a higher price rather than 2 billion shares of a couple of pennies. And they'll do that over and over. And some companies do it every 5 years. And that's usually not a good sign, because you don't really want to hold a company that dilutes a lot. But it's way more of a concern during a bear market. When we're in bull market, the dilution is less of an issue.
Yeah, definitely. So is that similar to like for example, charts like Tesla, who did a stock split and things like that. So like, it's hard to see like where the stock was before they did the split. And I just remember seeing it with my own eyes. I got to some debate with somebody and they was like, oh, Tesla's only at 800 or something like that. I was like, it just hit like 2,500 or something like that. I know I saw the price of it. And then they did the stock split. And I don't know if that's the same as like issuing shares or diluting or whatnot. But yeah.
No, a stock split, not a reverse split, but a regular split is generally more of a positive sign for a stock rather than a negative sign, because that just shows you that the stock has gained so much momentum and so much price that they'll split the stock to bring it back down, because there's something psychological. You want to buy one share of Amazon for $3,600, or you want to buy 5 shares, or 6 shares for $600. So they'll do the split because there's a psychological aspect. And that's more of a positive sign, but in the same way, it also will reflect in the chart. It's just in reverse because the stock is generally going up. So when you go and you look back at past history, the price that it reflects is adjusted for that split.
Yeah. Okay. Got you. So if there's a split, it's usually a positive sign. The chart can look the same as if the shares are being diluted. The charts can look the same, but a split is more positive than the company actually issuing more shares and things like that.
Right.
Okay.
And a reverse split is not necessarily always the end result of issuing billions of shares. Sometimes it's done. So for example, the Sprott Physical Uranium Trust did a reverse split on day one because there's a number of institutions and other vehicles that have a minimum stock price regulation in order to buy that stock. And so if the stock, I don't remember what it was trading at. I'm just, if it was trading at 50 cents and
$4 or something,
knew that the stock had to have a minimum of $2 per share, then they'll do a 4-for-1 split or a 4-for-1 reverse split and cut their shares down by 4, and it does a 4x to the stock price in the same movement. So a lot of times companies will do that also if they're rebranding. So there's one company in particular that was focused on gold. They had a gold asset and gold wasn't doing too well at the time. The stock price had slid down. Management decided, hey, we're gonna pivot. We're gonna go into uranium. We're gonna change our name. We'll do a fresh reverse split, get the stock price back up, reset the share count down to something reasonable. Because if you're up in the high hundreds of millions or billions of shares and your stock is 3.5 cents and you need to raise more money, then you have to issue another 500 million shares at 3 cents to raise any meaningful amount of money, and it just gets away from you. So a lot of companies will do that, and there are a few companies that issued very few shares, relatively speaking, throughout, that survived the bear market in uranium and didn't dilute the hell out of their shareholders. There's only a few, but yeah, we own a couple of them.
Yeah, definitely. Yeah, I was actually, I called TD Ameritrade. I was like, why am I being charged $75 for this reverse split and Sprott and blah 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 blah? Because I don't like spending money, for like stuff like that. It's like, okay, like what is this? What is happening? I didn't even know what a reverse split was, and then they explained it to me and stuff, and then. Now, how much Sprott has went up, the uranium trust has went up. It just like it wiped out that $75 fee.
Nice.
So that's good. So what's next for Uranium Insider? So we had a big bull market in 2007 or whatnot, and then we saw that huge bear market for however many years, a decade or whatnot, and you're in this business because like you love uranium. You've been studying it for a while. So as we continue to reach the heights of this bull market and however many years that is, what do you feel like is the long-term outlook for Uranium Insider? Will there be another bear market like how we had before? Or do you believe like with the move towards clean energy that uranium would be around to stay for a long time?
Honestly, I think the future is pretty bright for nuclear. I don't have a crystal ball, of course, but from the way things are going currently, I think that nuclear has a really, really exciting future, especially when it comes to the development of these small modular reactors. It's just really, really exciting technology to the extent that I understand it. And that's gaining momentum in multiple countries around the world. We could see the first small modular reactor up and running in the United States in as soon as 5 years in the state of Wyoming. So that's pretty cool if we see that actually happen and roll out. And the potential there is just really, really huge.
That's
So I think that the
Bill
future is really
Gates.
bright. What's that?
That Bill Gates reactor he's building up
That's
there.
that's the Natrium reactor from TerraPower. Yeah, Bill Gates co-founded the company,
Okay.
and that's in collaboration with the state of Wyoming. And it's going to be placed in a location where there was a previous coal power plant and connected to the existing grid. Brilliant. So excited about that development. I don't know what the future holds for Uranium Insider. I mean, obviously we're on board for this market. It's full speed ahead at this point. We're continuing to try to improve all the time our offering, and we've been doing these digital in-person members only webinars about once a month, and those have been great. So myself and one of my business partners, who's a retired former precious metals hedge fund manager, and just really, really sharp. He's kind of got my back in this whole endeavor. And we have these great conversations with our members. And our last members webinar, we had John Chimpaglia, the CEO of Sprott, as a guest on the webinar. And he got to really get into the weeds of what's going on with their physical uranium trust and what he's seeing in the market and all of that. And it really helps us to really dig down into everything and to be able to speak about it over a couple of hours and answer questions from members. It really, it's really been a grounding experience for us and for our members to kind of have some FaceTime and actually discuss things in person. So that's something that we're going to continue to do. It's been really, really awesome. And we're excited. I think it's not going to be a boring market. I think it could get really wild in the next 1 to 2 years. And from there, we're just going to have to see. We're going to have to see how hard it spikes to the upside, how hard it crashes to the downside, where it finds a bottom, and what happens from there. So I think we're going to play it by ear. We're going to continue to watch this sector on a daily basis. And, we're having fun. We're making money. Our members are making money. I get a couple of emails every single week that are just grateful for having the opportunity to be a member of our newsletter and be exposed to this trade. And there's a lot of people struggling right now. There's a lot of things going on with government lockdowns, and people can't leave their country, and people are losing their jobs, and just like, man, I mean, to the extent that we can help people hang on to some wealth and grow their wealth during times of inflation and times of insecurity around finances and around employment and around so many other things. It's like
retirement.
Yeah, exactly. I mean, if to help people be able to take care of themselves and their families and eventually maybe their communities and have some agency, have some ability to move around. I think that's ultra important right now. So we're very happy with how things are going, and intend to stay on that path for as long as we can.
That's good. So Uranium Insider is for the people. And that's good to hear, because especially like what I talked about, the retirement crisis, and we see like, we have a lot of mandates coming out, people, having to choose between like their morality and their beliefs and their livelihood and all these different things. And being able to make some money is very important. So Justin, I want to appreciate you for coming on. So we see that people can find you at the uraniuminsider.com, which if you don't see that on this screen, then we need to get your eyes checked. Okay. All right. And him and I, we both wear glasses, so we can see that pretty clearly. Okay. So they can find you on uraniuminsider.com. You have a yearly subscription. Is that correct?
Yes, we do. Yeah, it's $397 for the year. We're going to be raising our prices in December, but anybody that gets in before that price rise will have that rate locked in for as long as they want to remain members, and that you get a monthly in-depth newsletter that's sent out at the beginning of each month. We go deep into the macro in each newsletter, and then we obviously cover our stock picks. So you get our recommendations within the space for investment, that monthly newsletter, access to the members only webinars, and we send out bulletin emails sort of as needed throughout the month that's based on macro or company news that's actionable. And yeah, we'd love to have you on board.
Nice. And then you also on Twitter. I know there's been some times where I'm looking on the weekend, like, did Justin tweet? Did he tweet? What is he saying? What's happening? So it's just a quick and efficient way to really just get some good information, like, okay, what's happening in the market or whatnot. So they can find you at Uranium Insider on Twitter. Is that correct?
Correct, at Uranium Insider. Yeah, Twitter is a great place for investing in general, and I'm pretty active on there too. And if you follow me on there, you'll get connected based on what I retweet and checking out the space. There's some very, very sharp, very connected people on Twitter.
Yeah. It's sometimes it's challenging because, Twitter can be very political too. I mean, and I know that in investing, you have to watch politics because it does like affect, it can affect your finances with policies being passed and such like that, but it can definitely be very political. So if you don't have thick skin, you may want to consider just signing up for uraniuminsider.com and then also maybe just keeping up with the newsletter and not go on Twitter.
Good advice.
All right, man. Appreciate you for coming on. Let's do this again sometime.
Thanks for having me. Yeah, good to see you.